Welcome and thank you so much for joining us. This is 860 AM, Utah's Big Talker. You're listening to the Clint Womack Real Estate and Finance Show here every Saturday and Sunday morning at 7 a.m. We've got a very special show planned for you today. We've got Gayle Anthony, an estate planner, and Gary Munson, an alternative asset planner. Great financial talk for you today. This is the Clint Womack Real Estate and Finance Show. We are your local advocates for real estate and finance. This is a local show, and we're so thankful that you've joined us today. If you missed our show last week, we had a home inspector, Al Rickert, and also David Luna, a mortgage educator. Please visit our Facebook page at facebook.com/Womack Radio for previous shows, tips, pictures, advice, and just a good time. Please like us on Facebook and visit us anytime. If you have any questions about real estate or finance, please call anytime at 801-674-9995. Our first guest on the show today is Gayle Anthony. Gayle is an estate planner, an attorney, and an overall estate expert. Gayle, it's so great to have you on the show today. Tell us a little bit about yourself and what you do. Tell us about your family and where you work and things like that.
Sure. Well, first of all, thank you for having me. We've been here 10 years. I'm from Chicago. I graduated from Duke 25 years ago, and I've practiced in 5 states, currently practice in 3, and going for admittance in Texas. So it's been busy. My son is a lacrosse player at the University of Oregon. My husband works here at a company called IBON. So,
what brought you out to Salt Lake?
My husband had a job offer from IBON. It was with a friend he used to work with in another world, and he said he couldn't pass it up. It was supposed to be a 3-year deal, and 10 years later, we're still here. So we've kind of grown attached to Utah.
Well, it's great to have you here and have you on the show. So when Oregon plays Utah, I guess you have to root for Oregon then.
Oh, I definitely root for Oregon. In fact, they just beat them about 2 weeks ago pretty convincingly. So, my first love is Duke and everything else for basketball, but I've really gotten into the Oregon sports.
Tell me a little bit about the firm that you work for. What's the name of the firm that you're with?
I actually am a sole practitioner, so it's Gayle Anthony, Attorney at Law, PLLC. I travel. I do still practice in Illinois, Florida, and here, so I travel. I've been doing that for over 20 years.
And you do mostly estate planning?
I do mostly estate planning and disability. A lot of times the two overlap, so it's been good. I've also am a mediator and an arbitrator, so I definitely keep myself busy. Yeah,
sounds like it. For listeners that are listening, tell us a little bit more about what estate planning is and a little bit more about that.
Estate planning is essentially planning for when you pass, to the next world or whatever everybody believes in. But when you pass away, your assets will have to be divided, and whether it goes to your family or you don't want it to go to your family, or maybe you don't have a family, or maybe you have a charity, it basically has a direction, a blueprint of what you want done with what you've accumulated over your life. Most people have worked hard for that, so that should go where they want it to go.
So it's basically, it's combined with a trust, a living trust, and a will.
Sure. People can have a simple will, which would require a probate. It's a big, nasty word, but there is a $350 or $360 filing fee in the state of Utah. So if you can get a trust done, you would eliminate that most likely. But so you can have a trust with a pour-over will, sending anything into the trust that you don't want to be probated. It also provides for guardianship if you become incapacitated, whether it's for a short term or a long period of time. So your heirs don't have to go and get a guardianship proceeding. And you can also provide for where your children are going to be, raised.
Previously on the show, a few weeks ago, we talked about the Tony Soprano story. I don't know if you've heard anything about that or know of any similar cases, but
so many.
It's pretty important. Estate planning is an important part. I myself, I'm in my 30s, but I thought it was important enough to go out and get a trust and a will prepared, and I don't think you can ever start too early. I think do you find that if you prepare a trust early, sometimes you have to modify it as you acquire additional assets and children and things?
I would suggest having your trust looked at every 5 years. It's a fluid document. Maybe somebody you listed as an heir passed away, so maybe you want to kind of modify that. But more importantly, maybe a trustee or something became incapacitated, or maybe you just think maybe circumstances have changed enough that you want to change your executor or your trustee, or maybe even your children's guardians. For sure. And that's a big one. You know, your children, who you want to raise them when they're 4 years old may be different when they're 16 years old. And they obviously have different interests. They're almost on their own legally. So I would review it every 5 years for sure. And it's an easy modification. You don't have to redo the whole document. You just do an amendment to that trust.
Is that something you do? Do you prepare trusts and wills?
Yep, all the time.
Okay.
Yes.
So if for any of you out there that have questions about a trust or will, or would like a consultation or to get a trust or will prepared, this is Gayle Anthony. She's been in business for years. She's an expert in estate planning, and we can connect you with her. Call us anytime at 801-674-9995, and we'll connect you with Gayle. You can also text the word estate to 801-674-9995, and we'll get you in touch with Gayle and help you get that prepared. It's such an important piece. Gayle, are there any questions that frequently come up from your clients about estate planning?
You know, I think the biggest question I get is, do I need a will, or what is the difference between a will and a trust? People are thrown off by trust. They think it's going to cost them thousands and thousands of dollars. That's not the case. If you do the cost-benefit analysis, it's actually cheaper to do a trust than a will. But a lot of people think, well, maybe I don't have a lot of assets, so why do I need a will? But if you sit down with a document and say, okay, do you have equity in your house? Well, yeah, maybe some. Do you have life insurance? Oh, yeah, I forgot about that. So a lot of people, even though they may be living paycheck to paycheck or maybe don't consider them wealthy, they still need a will to dispose of that assets. And of course, if you do have a significant estate, you need to look at tax planning as well at that point.
This is the Clint Womack Real Estate and Finance Show. We're speaking with Gayle Anthony, an estate planner here in Salt Lake City. When we come back, we're going to discuss a little bit more about estate planning, the importance of disability and life insurance as well. Please stay with us, and we will be right back after the break. Welcome back. Thank you so much for joining us back here. This is the Clint Womack Real Estate and Finance Show on 860 AM, Utah's Big Talker. We've got Gayle Anthony with us here today. We've been talking about the importance of estate planning, life insurance, and disability insurance. Gayle, I understand that life insurance is an important piece of the whole estate puzzle. Tell me a little bit more about your opinions and takes on the importance of life insurance.
Well, I definitely think it's just as important as having a will or a trust. A lot of people have mortgages. Sometimes they can get insurance to cover the mortgage. A lot of people think they can't afford it. It's not a big investment when you look at the cost and the risk of not having it. If the main income earner passes away or becomes disabled in any way, you're going to want that life insurance. And if it's whole life, you can draw on it to pay illnesses before they pass away, if it's, that serious. But disability insurance is another one. It's a little bit more expensive than life insurance. But today, the chances, with everybody living as long as they do, the chances of becoming disabled at some point in your life and not being able to work a 40-hour-a-week job above poverty, basically, is pretty high. And, the older we get, it does not have to be somebody who's 70 years old who has a bad hip. I'm seeing people in their 40s. I'm seeing people in their 50s, for sure, that have worked two jobs, worked their whole life since they were 16 years old. if they have disability insurance, that's going to carry them over. They're going to be able to keep their house, maintain their, not be on food stamps, maintain their at least some kind of a standard of living, waiting for a federal disability award, which can take up to a year and a half, if not 2-3 years.
It's such an important point that you bring that up. I don't have the exact statistics with me, but I think you're much more likely to get disabled than you are to die, whether it's a car accident, a skiing accident, or sports injury, or whatever it may be. And some of these injuries can be serious enough that it keeps you from working.
Sure, for sure. And particularly at a job, if you had a manual labor job, and it doesn't have to be a factory type of job. Maybe you ran construction. Maybe you were quite successful in that. But you can't do that if your spine is torn up or if you get cancer. Even if it's just for a short period of time. If you're disabled for 3 months, that's short-term disability. 3 months is nothing. If you have a surgery, you'll be out 3 months for sure. Long-term disability doesn't kick in until you've been off of work for a year. So, you should have a cushion there. But if you don't have the disability insurance to hold you over, you're going to have some hard times.
Yeah, I actually had a coworker. We're working at desk jobs, and he had an issue with his eyes where he's not able to look at a computer screen for more than a few hours a day, and he actually had to go and get a different job because he was looking at a computer screen. So I think disability is for everyone. You can maybe try to get it through your employer or even get it on your own, but I would recommend getting it earlier rather than later because the premiums will be lower if you're healthier. And maybe that's not always available, but I have disability insurance myself, and my premium's fairly affordable just because I was able to get it when I'm young and healthy. And it's just kind of an extra nice security blanket and nice peace of mind having that policy there. Do you have any clients that come to you and wish they would have got disability insurance after the fact?
Oh, many of them. I've had cancer cases striking in their 40s, no insurance, no disability. You can actually get a policy that is a hybrid of a life insurance and a disability. So you can use it if you become disabled, but if not, it carries over to the life insurance. So that's a product I've been talking to my clients about. But I definitely have, many clients that just because you have cancer, the government's not going to hand out disability for you. You have to be off of work for 12 months before that happens. If you're under 50, you're going to go to a hearing. That's going to be at least 2 years. So I definitely have other people that are proactive at the same time. Maybe they own their own business, but they had cancer or some catastrophic illness. One in particular was terminal, and we put her, because she owned her own business, she wouldn't be qualified under the disability rules to get disability. So we ended up taking her husband and making her husband the main owner of the company because she couldn't do the work anymore, but yet she had clients, the pretty good revenue coming in, and she was able to get on disability within 5 months because she was terminal.
And that's the advantage of working with Gayle Anthony, working with a local professional. I highly recommend Gayle Anthony because you can go in and meet with her and she can look at your situation because each situation is different, and she can get you into a plan and come up with a backup plan if something's not working and try to find a solution. That's why it's so important that you work with professionals that you can trust. I trust Gayle Anthony, and I know that she can develop a plan for you, a good estate plan, disability, and point you in the right direction for providers for disability and life insurance. I like that hybrid idea of the disability and life policy. And if you're interested in that or want more details, please call or text 801-674-9995. You can text the word hybrid to 801-674-9995, and we'll get you in touch with Gayle Anthony, and she can point you in the right direction and help you develop a plan. While we still got you here, tell us a little bit more about some of the interesting stories in your business and why you like your business.
Well, I knew I was going to be an attorney from the time I was 14 on. My parents went through a divorce. Initially, early in my career, I actually did domestic law, and I just can't do it anymore. It's too trying. But I wanted to be a lawyer to be able to help people that had precarious situations that through no fault of their own they found themselves in. And estate planning is one of them. And one of my favorite cases has actually lasted over 15 years. And it was a gentleman and a wife in a second marriage, and they both wanted their separate estates to go to their own adult children. But that was fine, and we set that up, but she became terminally ill. So then it became planning for how to take care of her at that point, what assets. The adult children wanted the assets for themselves rather than having their mother being taken care of. She passed away. The gentleman ended up marrying again. And by this time, he's in his 80s, and his bride was in her 70s. Again, it was dealing with prenups. It was dealing with making sure everything from each person went to their adult children versus the spouse. Because by this time, it's marriage number 3. This woman ended up with Alzheimer's, and now she is in an Alzheimer care facility. So then it became the same thing. The adult son wanted the money. We had to protect it from the son. We had to make sure power of attorneys were in place so that the husband could take care of the wife and the sons would not have access to anything. So it's literally been over 15 years in this saga, and it keeps evolving. But that goes to your point of being able to modify things. And in this case, we ended up right before she became what I would call as close to the line as possible, being incapacitated, signed an irrevocable trust. The money is there for her sons when she passes, but in the interim, they can't touch it in any way, and it'll take care of her through her illness. So.
Yeah, and we're going to talk a little bit more about that on the show today. Just the importance of planning, any kind of plan, no matter what business you do or what venture you're taking on. It's always important to have a plan in place and then regularly review that plan so that you can make sure that you're on course. We're going to talk a little bit more about budgeting and saving. And one of these takeaway messages that I think is to at least get a 3 months savings set up so that if you do have an injury or lose a job, you at least have 3 months. And it sounds like the ultimate goal would be 1.5 to 2 years in savings, because you could have that as a fallback plan if you were to lose a job or have a major disability. So budgeting, planning, saving, investing, these are all very important topics and very important ideas for all of our listeners out there. This is the Clint Womack Real Estate and Finance Show on 860 AM, Utah's Big Talker. We've got Gayle Anthony here with us, an estate planner, and we are so thankful to have you on the show. Any last words of wisdom or people out there that are on the fence about meeting with an estate planner?
I think a lot of people think it's scary. They maybe don't want to face their own mortality, but honestly, if you have it done, do it for your kids, if nothing else, because they're the ones left to figure out what to do or who they're going to live with or, court proceedings. So do it for your kids, even if you think that it's not a big issue and you're 35 or 40 and you got years to live. Those are the ones that are in car accidents, ski accidents, potential of cancer. So I would do it for kids, but it's not a scary process. We go through each individual, what their wishes are. Each one, like you said, is totally different.
Such a pleasure to have you on the show. Thanks again for joining us, Gayle.
Thank you for having me.
Yeah, if you've got any questions for Gayle or if you'd like to meet with her, please call 801-674-9995 or text the words Gayle Anthony to 801-674-9995, and we'll get you in touch with her. This is the Clint Womack Real Estate and Finance Show. Our next guest joining us is Gary Munson, an alternative asset planner. He's got all kinds of good stuff planned for us. Gary, thank you for coming on the show today. So first of all, you've got the title Alternative Asset Planner. Tell me a little bit more about that.
Thanks. I'd love to. First, thanks for letting me be on. We've got a great message to share. What we have is alternatives to Wall Street assets. Everyone's got their long-term savings tied up in a mutual fund or common stocks on the Wall Street. And that stuff is just subject to the risk. There's no floor there. And so we've got people that want to take their long-term savings away from Wall Street and put it in a Main Street type of an asset. Like maybe I want to own a rental home, or I'd like to have my retirement coming to me in the form of mortgage payments that are just showing up every single month. And so we help people convert from a non-collateral backed thing like on Wall Street that could lose everything tomorrow into an asset backed, like a mortgage or a home, for their long-term savings. And so that's what we do. That's what alternative assets are to us.
Before we go any further, tell me a little bit about yourself and your family and your background.
Thanks much. I grew up here in Utah. I've got 3 daughters. They range from 17 to 7 in age. I got a degree in accounting from Brigham Young. But I've been in financial planning for, going on 20 years now. I'm pretty old. But seen a lot of things, and I'm just to the point now where I don't want risk. And most of the clients that are attracted to us are those people that want control. They want to get rid of the risk. And over the last 12 years, our firm has actually moved $2 billion away from Wall Street onto these Main Street type of investments.
That's a pretty hefty number. Are most of your clients in Utah, or do you serve the entire country?
We've been nationwide because we've been mostly internet marketing, and so we've got clients nationwide.
Tell me a little bit more about, so you want to take away the risk.
Yeah.
A lot of people associate a low risk with a low return. It sounds like you might have some pretty decent returns with a lower degree of risk.
That's kind of how we feel. It just depends on what you see as risk. For instance, if we put a client in a mortgage note, it's essentially our borrowers are paying maybe to the Clint Womack IRA instead of to the Bank of America. And so that's just a payment that comes in every month. And our rates of return on something like that are usually in the 8% range, which feels like a pretty good rate of return since you're getting 1.5 on a CD at the bank. And so it's a way to just increase returns and again, still be somewhere really safe.
So self-directed IRA, this is an IRA that someone can set up for themselves instead of going to Scottrade or Ameritrade. They set up, is that a legal document or formation that they do with you, or how does that self-directed IRA work?
You are wise. There's lots of ways that you can do it. I'd suggest that you use our firm. We call it an IRA LLC. And so it's a limited liability corporation. But ours have been through 50 IRS audits. And so they've passed. We know that they work. And so what you've said is correct. It's a vehicle where people just take their money away from Scottrade or Fidelity. And then they can go and invest that pretty much anywhere. There's maybe 3 restrictions that they can't invest their dollars in. They can't buy life insurance. They can't go buy collectibles. And they can't buy certain, stock in a teeny company. But other than that, it's wide open what they want to do. Some people go buy a Quiznos franchise with it. Some people go buy a fourplex or an apartment complex. Lots of things you can do.
Very cool. It sounds like it's pretty diverse and a lot of different options. We've got very great advice here from Gary Munson, alternative asset planner. This is the Clint Womack Real Estate and Finance Show. Please stay with us. We'll be right back after the break and continue our conversation with Gary. Welcome back. This is the Clint Womack Real Estate and Finance Show on 860 AM, Utah's Big Talker. We've got Gary Munson here. He is with Main Street Alternative Investments, mainstreetplanners.com, I believe. He is full of great advice. We've been talking about alternative investments, gold, silver, real estate, even franchises like a Quiznos or McDonald's or something like that. Tell me a little bit more. I'm curious about gold and silver. What's your take on that? Do you advise people to buy gold and silver stocks, or do you want them to actually own the metals and hold on to those?
Boy, that's a good question. Wall Street's done a nice job of making us feel like we're getting diversified by having a fund of everything you could have. You could go buy a REIT and feel like you own some real estate. You could go buy a gold fund, but that is still subject to market risk. And so if there's a bad Friday in Greece and it looks like their whole government's going to shut down and go bankrupt, the entire market will drop. And so you're subject to the market risk there. we would generally suggest people hold if they want to look at precious metals, own the metals themselves. And we're not some people will buy it speculatively saying, okay, gold is at a 3-year low or whatever they might think and hope to just turn and sell it like a stock. And that's not what we're suggesting. We're suggesting that people hold it as kind of a hedge against inflation, because we feel like all the cash that they're printing right now, inflation's got to happen. Mm-hmm. And so people, we'll suggest they hold maybe 5 to 10% of their assets in the actual metals themselves.
Is that something they would hold inside of their self-directed IRA? Can you hold tangible assets?
I can, absolutely.
So that you would, how would you do that? How would you hold a precious metal inside
It's a good question. It's owned, it's titled in the name of the IRA LLC. So maybe it's the Clint Womack IRA LLC. And so, they just have to be careful about taking delivery of certain kinds of, metals. And so just know that it can be done. Specifically, we can give you the guidance that'll keep you out of trouble with the IRS. It's not hard, and it's done all the time.
And that's why it's so important, again, to reiterate the point of working with professionals. Gary does this on a daily basis. He knows what he's doing, and he knows how to offer you advice and guidance on how to set up your estate, how to set up your retirement, and just give you overall great advice. And that's why it's so important to work with a professional that knows what he's doing. This is Gary Munson. If you want to get in touch with Gary, please call me at 801-674-9995 or text the words Gary Munson to 801-674-9995. I wanted to go into a cool product that we were talking about on the break. It's, you call it a jailbreak 401k. Tell me a little bit about that.
Well, a lot of people are concerned, thank heavens for a 401k, simply because that's forced savings. And, I worked in the mortgage industry for a long time, and if people didn't have a 401k, there'd be no assets. So I'm glad that there's some forced savings. But we've got people that have got a lot of money accumulated in their company's 401k. They're not really enamored with the investment choices that they've got there, and they'd like to move it away. And so we've got a product called Jailbreak 401k that will allow you to take up to half of the assets you've got in your company 401k. You're still employed at the company, so it's an in-service movement. And the only caveat is they have to be married. And then we can move half of that money away, and they can go put it in alternative assets. The money remains qualified, tax qualified, which means they don't pay the tax for, like withdrawing it. We're just moving it from one place to another. So it maintains its tax qualification. So it's growing tax deferred. They will be taxed when it comes out, but we can move half of it away, take it away from the risks of Wall Street, and again, put it in a tangible thing. Like, if they wanted to go buy that franchise, a Subway, or if they wanted to go buy, an apartment complex, or invest in mortgage notes or gold and silver.
Very exclusive information. I don't think many people have heard of that. And
it's not very common, but it's been well tested and tried, and the courts will do it.
I think one of the maybe misconceptions out there is that people are hesitant to set up a self-directed IRA because maybe they feel like they don't have the expertise or they don't want to put the time into doing it. Tell me how much you do, how much guidance you give, and how much your clients kind of have to do on their own to manage this type of vehicle.
The key word, it is self-directed. So what we want to do is educate people, help them make decisions that they're comfortable with. At the firm, we've got a managed account if they want. We'll help them go through the asset allocation process, choose what they want, help them execute it. And then if they want to just kind of turn it over, we can help manage that kind of their assets. Make sure, if they chose rental properties, we keep the properties rented. We can collect the mortgages for them. So we can help them do that. Or there's people that just come in and say, look, I want to invest in things that I'm an expert in, which is sound advice, and they want to handle it. We can do it either way.
So you'd help them set it up. You can do as little as just doing the setup, or as much as kind of holding their hand through every step of the way.
Yep.
Very, very great options here with Gary Munson. I myself do mortgages.
Yeah.
So another alternative investment is buying an actual mortgage where you're the lien holder.
Right.
The person's instead of making their payment to Bank of America, they're making it to you.
Yeah.
So say someone has $100,000.
Yeah.
Would they have to only get a mortgage that's $100,000? Can you split up the lien, or do you buy a pool of mortgages?
That's a really good question.
How does that work?
Good question. A lot of the mortgages that we are working with are smaller numbers. These are $20,000 mortgages. You're familiar with something called a loan to value, which means there'd be maybe a $20,000 loan on a $40,000 property. And so it allows us to have some diversification. Maybe we're selling these, mortgage on homes in 3 or 4 different markets around the country. So they can, again, diversify a market. And so we'll break them up. And so someone who has 100,000, which is a good number, that's probably the average kind of scenario we're working with. We would diversify that into probably 4 different assets. Maybe 2 of those things would be mortgages. Maybe a couple of them would be cash flow, rental properties, have some money in, precious metals, in some other, types of cash flow investments, which are very important to us.
So if you could split up 100,000, that means that you're maybe, if you're getting part of a rental property, is that kind of like a real estate investment trust, or your
sole ownership?
Sole ownership.
Yep, absolutely.
Is that probably in another state?
It is.
Where you can get a rental for 40,000?
It's the craziest thing. There are places in America you can go buy a great house for $40,000 that pays you an $800 a month rent. And that's one of those situations where in our economy right now, we can't find that in Utah. Obviously, if I'm going to go buy a house that's renting for $800, I'm going to be, $150?
Maybe out in the middle of the desert or something.
Maybe somewhere crazy. But, I can go to a great place in Birmingham, Alabama, or St. Louis, Missouri, or Indianapolis, Indiana, where I can buy that kind of a property that's been rehabbed up to a good rental quality standard. It's got a renter in place that's paying. So it gives our, mortgage holders a great confidence, because the people that are borrowing the money from them are putting half of the money down. So they've got skin in the game. And I see a default being very, very low in risk. But if it does, it's actually a great thing for the lien holder.
Yeah,
we can work through that.
40 or 50% equity in there, you're in a pretty good position.
Go ahead, please.
Yeah.
Default.
So it sounds like a lot of the mortgages that you are helping people is more private mortgage, where the people have maybe lower credit scores, but they've got a big down payment.
Good question. Sometimes yes. And then sometimes the person that's borrowing the money is, another person's IRA.
Okay.
And so again, there's some pretty good assurances that the payments are going to be made, because people aren't going to default on having that much money in an investment.
So you guys are kind of packaging all these deals and finding great deals for your clients. So you're doing a great service out there. I think you have a lot to offer. Again, this is Gary Munson, Alternative Asset Planner. If you have any questions for him, or if you'd like to meet with him, give me a call at 801-674-9995, and we can get you in touch with Gary and get you on that path to setting up a plan and getting things figured out for your retirement. We've talked about it before, how we can't really depend on the government. In previous shows, I've talked about the letter that I got from Social Security, basically saying that here's the amount today. This amount probably won't be the same. It'll probably be lower when you go to retire. So I think it's so important that people be proactive, that they look for alternatives out there to getting. I mean, there's always some risk in investing, but if you can limit that risk and still look for good returns, I think that's so important. Do you have any stories of clients that you've helped that have really liked your services?
It's just, it's fun to see people kind of get some hope again, Clint, because, people have seen, 2009 happen, and people lost 40% of the balance of their, retirement accounts. People had to go back to work for, the average person right now is feeling like, I'm not going to be able to retire till I'm 78. It's just, and so to give people back some hope where we can actually, take their rate of return from, 1% in a CD or a money market account to, 8% and feeling pretty confident. Like you said, there's always some risk. But what I like about what we have is it seems like our risk is more transparent. So, the risk of a rental property, the fridge breaks, or maybe there's going to be, tenant vacancy or perhaps tenant damage, but we know what that is. And so we can hedge against that risk. And so again, I would way rather be in a place where I understand the risk than trying to buy a tech mutual fund, where maybe it's 100 tech stock companies and maybe one of them's Dell Computer, and I have no idea what Dell Computer is trying to do. I mean, it's just, throwing a dart at, with your eyes closed. It's crazy. So it's awesome to see people grab a hold of, having some hope again. It's fun to see, people who feel like, man, I will be able to retire because the returns on this are, cash in my mailbox, and that's how we measure the return is actually showing up.
You're actually beating inflation instead
staying
of maybe
just
staying with it.
Yeah.
Great advice. Yeah, like you were saying, that with the stock market, people, maybe Warren Buffett has some crystal ball that he hasn't told us about, but I'm always a proponent of diversity. I think, maybe have some money in the market, but be diverse.
Yep.
I even have a cash value life insurance policy. Might not be for everyone, but I think it's worth looking into. Real estate, huge proponent of that. Rental properties, like you're saying, you can hedge against some of the risk. You have insurance on the property if it gets damaged or burnt.
Yep.
You even have what's called a rent loss insurance. If the home burns down, the insurance company will pay you for months that the home is being rebuilt or you would have been collecting rents. So there's definitely a way to manage that risk. So great to have you on the show here and hear some of that advice. This is the Clint Womack Real Estate and Finance Show on 860 AM, Utah's Big Talker. We'll continue our conversation with Gary Munson on the other side of the break. Stay with us, and we will be right back. Welcome back. Again, this is the Clint Womack Real Estate and Finance Show on 860 AM, Utah's Big Talker. Earlier in the show, we had Gayle Anthony, and we were discussing estate planning and the importance of life insurance and disability coverage. And right now we've been speaking with Gary Munson, an alternative asset planner. Gary, before we go, tell me, you touched a little bit on it, but tell me a little bit more about your background and what got you to shift from what you were doing before and into what you're doing now.
Sure. Thanks a lot. I got a degree in accounting, which taught me that I didn't want to be an accountant. And so even before I graduated college, I went and got my financial planning licenses in securities and insurance. And really, I got charged up by that. I lost a brother-in-law while I was in college. He was only 39, could have been devastating to the family. He luckily had insurance. And so I saw the big difference it made. I learned about things that they don't teach you about in accounting, like rates of return and, tax deferred versus tax free, the differences. And so that was really important to me. And so that kept me there. I ended up veering into, I had my real estate license. So I sold some real estate, both commercial and residential. And then kind of settled in real estate finance for a long time. Worked there till 2009, and the industry spit me out. And then, went and kind of went back into financial planning and, trying to help people again. The market's been frozen. They call it the decade of nothing because people haven't gotten anything out of the market for 10 years. It's kind of on a steep climb right now, but there's a lot of people who don't feel like that's justified. I talk to people that feel like they've won back some of their losses and they're ready to pull out and maybe, go do something else with their dollars. And that's why this has been important.
What are some of your favorite investments that you offer to your clients?
We do my personal, and I've talked about it a lot, is lending, is just being mortgage lender because I know about the risk. I know that they're on title, first lien position. I know they're protected by the homeowner's insurance. And so they have collateral, something that's backed. It's a tangible thing that they own. And then the payments are going to come in whether there's a tenant in place or not. There are people who have a disposition to be an owner of these properties. Rates of return on those are in the 12% range. Again, it's one of those times where rent stayed very high or steady, and then the value of the assets have really dropped just due to the economy. And so we're able to buy these cash flows that are paying us 12%, where real estate over time has been more in the 6 and 7% range. And so it's just kind of that weird window of time.
Tell me, you touched on Alabama and some other states.
Yeah.
How do you protect and give your clients a level of comfort on having an out-of-state investment that they can't see and that they can't touch?
Such a good question, because that's usually people's biggest concern.
Yeah, like I know personally, I personally rather invest in Salt Lake because I can drive to the property,
drive by, see if they're cutting the lawn,
see what's going on.
Absolutely.
And you've got a property out in Alabama. I mean, the purchase price is $40,000, which is great, but you've got that little bit of nervousness maybe in not being able to see it
completely. We've got about 14 metrics that we look at that tells us where we want to buy properties. One of them is our cost to return. And so, in Utah, again, to get a $700 or $800 a month rent, I'm going to have to spend $150. That's going to bring my return way down. And so I don't want to be hands-on. I don't want to be a property manager. I've done that. I've owned property for 20 years and been the property manager. Sometimes it's worked well. Sometimes it's not. So if I want to give it to a property manager, which we put a lot of our confidence in our local property managers. They're the ones that are going to make sure the property's kept up. They're the ones that are going to make sure that there's a tenant in place. And so we just have to get comfortable with the market, with the diverse market. We don't want to be in Vegas. We don't want to be in Detroit, because those are one industry based and support of one industry. And when those industries are off, we're going to be away from there. But we want to be in a market where there's 3 or 4 different industries that will employ our tenants. So that's, again, one of the metrics that we look at. And so as we look at all 14 of these metrics, we start to feel some confidence. Now, again, we can use technology. You understand the market here in Salt Lake. What's Rose Park versus Mount Olympus. You know what it is.
Maybe a little difference.
So there's a difference. But the nice thing about, we've got demographics websites that tell us about crime rates based on zip code, based on, is there 2 income families in the home? How many kids are there? I mean, every demographic you could want. We've got Google Maps that'll take us and give us an aerial view of the neighborhood, so we know if it's across the street from a factory or right near an elementary school. And so some of the technology we can utilize to our benefit to kind of make us more local. And then some of it we just have to rely on our property managers there.
Me personally, I like the idea. I mean, if you can buy a property for $40,000 and rent it out for $800 a month, that's pretty good. Me personally, I would fly out to Alabama. Yeah. I would look at the property. I would interview the property manager.
Sure.
So it sounds like you have clients.
Some people do that, and
do that.
We welcome them. If they don't, we want to do a home inspection, because then we get a manager on the ground, an expert on the ground that's crawling around behind the furnace and looking at the rafters and telling us how much life's left on the roof. So again, they have a better eye than you or I would, even if we were here. So they really give us the lowdown on what's going on with the property. We can go in and check the zip code for crime rates and get some ideas of what's happening with that property and in the area.
Are these properties that your company purchases and then the individual investor buys them from your company?
Correct.
Okay. So you've already done a little bit of due diligence on the property and probably had your own inspection on it and things.
Done some rehab. The idea is when the client buys it, next month they'll receive a return. Because it's got a tenant in place. It's paying. We've done the amount of rehab. I mean, you wouldn't live there, but these folks are very comfortable. They really like, there's a certain level of finish in a home.
You're probably not going to put granite countertops.
We're not putting granite countertops, and we're not putting new cabinets. We'll go in and do a rehab, but there's no return in cabinets. And so it's usually an old cabinet that's painted.
Sand it down, paint it,
put new knobs on it. They're happy.
Yeah.
They're happy.
Very nice. Well, I love the ideas. Great advice here with Gary Munson. Again, this is the Clint Womack Real Estate and Finance Show on 860 AM, Utah's Big Talker. Gary, thank you so much for joining us.
So happy to be here. Thank you.
Again, if you want to get in touch with Gary, please call me at 801-674-9995 or text the words alternative assets to 801-674-9995. And I will get you in touch with Gary and get you on a path to future financial freedom. That's what the show is all about, getting you in touch with the professionals that can help you set up a plan and help you get into a better position down the road. It's all about planning now in before the accident happens or before anything happens, having that plan in place. We wanted to go into our open house segment. We've got 6 open houses that we'd like to share with you today. The first one's at 798 East Bordeaux Drive in Midvale. This home is listed for $189,000, listed by Utah Realty Advisors. That home is open on Saturday, April 12th from 11 a.m. to 2 p.m. Our next open house is at 11624 South Alexandra, number 113. That's out in Daybreak in South Jordan. That home is listed for $320,900 and listed by Garbett Real Estate. The home is open on Saturday, April 12th from 10:30 a.m. to 6 p.m. Another open house on Saturday is at 661 10th Avenue. This is up in the Avenues in Salt Lake City, listed for $510,000. It's 2,700 square feet, 4 bedrooms, 2 baths, listed by Intermountain Properties. If you want any more detailed information on these properties, or if you'd like to schedule a time to go in that's outside of the open house windows, please text the words open house to 801-674-9995, or give me a call anytime and we can set up a private showing to go and see any of these homes. Now is the time for our restaurant of the week, our free lunch giveaway. If you've missed it in the past, we give a free lunch out every week. And this week it's to Cafe Rio. We've got a $25 gift card, free lunch giveaway. Cafe Rio is great food, great environment. It's always packed when I go there, so maybe even try phoning in advance. But they've got excellent food. It's always fresh. We've got a free lunch for Cafe Rio. Text the words free lunch to 801-674-9995, and we'll hook you up with a free lunch to Cafe Rio. We'd like to share 3 more open houses with you. The next open house is open on Sunday, and that home is located at 822 East Logan Avenue in Salt Lake City. It's listed for $245,000, open on Sunday, April 13th from 12 p.m. to 3 p.m. Our next open house is at 14264 South Draper Hill Drive, number 163. This home is in Draper Hillside, listed for $271,649 down to the dollar. That's a new home by D.R. Horton. And our last open house for the day is at 683 East 3rd Avenue. That home is listed for $599,999. Home is open on Sunday, April 13th from 12 p.m. to 6 p.m. Feel free to stop by any of these open houses and check them out. If you'd like to set up an exclusive showing or like more details, again, text the words open house to 801-674-9995. Just like to go in a little bit more and recap what we've discussed today. We had Gayle Anthony talking about estate planning, and the key word there is planning. And then we had Gary Munson, an alternative asset planner. Planning is so important, and the first step that I recommend to each of you, everyone listening, is to come up with a budget. And the very first part of any budget, in my opinion, is paying off your credit cards, paying off that revolving debt, paying off these credit cards that have a 16% interest rate. If you haven't heard the quote from Albert Einstein, he said, compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. If you want to be as wise as Albert Einstein, start collecting interest. If you want to be not as wise, keep paying interest. But the very first step and part of any financial plan, any of my clients that I meet with, is paying down that revolving debt, paying those credit cards down to zero and keeping them zero. It's a good idea to have those credit cards open and use them to keep your credit established, but you don't want to pay those banks 16 to 25% interest. Whether it takes 5 months or 5 years, pay a little extra each month to get those credit cards down to zero, and then you can start developing some of your other parts of your plan. You can start getting the life insurance and disability insurance, start setting aside extra money for savings and some of these alternative assets that we've talked about. But it's so important to start that plan, get those credit cards paid down. Thank you so much for joining us. It's been a pleasure to have you with us on the show today. This is the Clint Womack Real Estate and Finance Show. Stay with us. We've got another great show planned for you next week. Please tune in, and we will be with you next week.